Scale and escape. What is up? All right, folks. Listen, to scale and escape, you're going to need a little money, right? So today I'm going to talk to you about money. I'm going to talk to you about your wealth. I'm going to talk to you about how you mimic the wealthy, the banks, and how you do something that's very important. If you're taking notes, write this down. How you take back control of your money, because you are not in control of your money right now. I'm going to show you these wealth-generating strategies in a way that it is so simple. You don't need a degree in finance. You don't need to have spent 16 years in Wall Street like I did. According to Social Security, 5 out of 100 people will be financially secure at the age of retirement. 95% of all the people out there are going to be working into their retirements, not because they want to, but because they have to. Before you guys get worried about that and start thinking, oh shit, I got some good news. Every single one of you in this room, you are the 5%. You are the 5% because you're here. You're willing to invest your time. You're willing to invest your money. You're willing to invest your energy, your effort to be here to learn something new. Put your hands together for yourself. When I sit in your seats, I go to events all the time. I've been doing this a long time. I look up at the person on the stage and I'm like, why should I listen to this person? So I'm going to take just a couple minutes to tell you who I am. I grew up in a lower middle-class family. Like Ed Milet, my dad was an alcoholic. But my mom, she raised me, and it was a huge struggle for her. But even though we struggled financially, I always wanted more. So let's fast forward to 2000s. Early 2000s, I'd accomplished 2 major victories in my life. Number 1, I became a professional snowboarder. That was my biggest goal growing up. Number 2, I founded a chain of skateboard, snowboard shops called Fat Man Board Shops. I sold them, but they're still open today. But you know what? I still, even after those 2 things, wanted more. And I was always drawn to money. I was always drawn to the world of finance, probably because I didn't have any. So I started studying. I dove in deep. And I became a financial advisor. And while I was an advisor, I was crushing it. I started flipping a few houses. And then all of a sudden, 2008 rolls around. And the Great Recession hit me like a Mack truck. And I got to the point where I was 1 payment away from being completely bankrupt. I went home one night to my girlfriend who had just moved in. She's on the screen. And I said, sweetie, I need your help. I need your help paying the mortgage. I need your help paying the utilities. And by the way, sweetie, my friend Pete's going to move into that bedroom down the hall. So what was low in 2009, 10, 11? Real estate, yeah, everything, but real estate. So I started buying real estate. And I did this all the way up to 2014, and just when I thought I was getting back on top of things, I realized I'd made some mistakes. And in 2014, I had to sell every one of those properties. Man, I hit the lowest point in my life. And I'll never forget, I got in the mail a postcard. It said, come to this 3-day seminar to learn how to flip houses. I know what you're thinking. You're thinking, what the hell? You can go learn how to flip houses. You just lost it all. But if I flipped the postcard around, you know what it said? It said, if you come to this seminar, we're going to give you a free iPod shuffle. I said, ooh, I got nothing to lose, but I got an iPod shuffle to gain, so off I went. I went to that event, and I sat at that event, not knowing why I was there. And then all of a sudden, 2 guys get on the stage, Mike and Greg. You guys know who Greg is here. He spoke here. And they spoke about money. Now, remember, I'm a Wall Street guy, one of the top guys, so I thought. And all of a sudden, they're talking about money in a way that I've never heard money talked about. I heard Greg stand up there, and he said, the ultimate in real estate is being the bank. So I'm like, shit, all right, man, I got to be the bank. I started questioning everything that I learned because I started diving in. I'm a researcher, and I started looking at what the wealthy do with money and how it was the complete opposite of every single thing I was taught to do as an advisor. I'm going to share with you today what I've learned on my journey so that you guys can transform your lives and your finances. Take a look at this slide. Will Rogers. It's a profound quote. The biggest problem in America is not what people don't know. The biggest problem in America is what they think they know that just ain't so. Money is nothing more than a means of exchange. Money for food, food for money. Money for car, car for money. Money for house, house for money. That's all money is. Now this one, let's go into this. What company uses compound interest? Okay, banks. It's the number one thing I heard. Nobody's getting a book because that is wrong. Banks do not use compound interest. Banks never use compound interest. They charge you compound interest. They pay you compound interest. When you walk into the bank, what's your name? Guy. When you walk into the bank, because you guys have all been taught to do what when you get paid? Put your money in the bank. When you walk into the bank and you give your banker money, does the bank take that money and put it in a box with your name on it and put it in the safe or the vault? No. What do they do with that money? Banks are in the business of making your money work for them. That's a shame, but you gave up control of that money to allow them to do that. That's got to change. You got to be your own bank. Start letting your money work for you. Are your dollars worth more now or in the future? Absolutely now. You guys know inflation is over 7%. So if your dollars are worth more, how about taxes? Are they going up or down? So stupid, but yes, they're going up. So your dollars are worth the most today. Taxes are going up in the future. So what do most people do with their money? Retirement accounts, 401ks. Ooh, great. You put money in a 401k, you're getting a tax deduction on that money today at the lowest tax rate you're ever going to be at. Then that money sits there for 5, 10, 15, 20 years, and then what do? You take back weaker dollars because they're not worth as much in the future. And during that period of time, you lost the opportunity to use that money. Would you ever buy a car, your dream car, wait, and then right when you get the keys to drive it, you say to the person, you say, I can't drive this car, man. Sorry, take the keys back. I got to wait 5, 10, or 15 years. I got to treat this car the same way I treat my money. Is that what you do with the things you buy? No, that's what you do with the money you have. And it stops today. Who is in control of deciding and picking what funds and what investment choices were in those 401ks? Was it you? No, it was me. And who was getting the commission? Me. So now that we understand what retirement accounts are, can we change that? And the answer is yes. You can take back control of all of your money in your retirement accounts. 401ks, 457s, 403bs, your traditional IRAs. It's very simple. And when you take back control, you can then direct where that money goes. You can put that money into crypto. Anyone in here like Bitcoin, Ethereum, crypto? Oh yeah, it's a hot thing right now. How about real estate? Anyone here like real estate? What if you could take some of that $35 trillion and invest it into real estate? Or maybe you hate real estate because you don't like toilets, you don't like tenants, and you don't like termites. I agree. Hate them all. So you just want to be the bank and you want to control everything and own nothing. So what do? You lend the money. Well, you could do that too. How much money is in your retirement account? You can use your retirement account if you make one change. Everything I'm going to talk to you about today involves one change. That's it. And that is where your money goes. Let's talk about housing. Has your house gone up in value in the last 3 years? Oh yeah, how much? 90. A lot. Being excited about the equity in your house is bullshit. It does nothing to change your life. You got to make that money go to work for you by changing one thing. So strategy number 2, we are going to take that hidden equity. We're going to tell that money sitting on the couch, money, you're going to go to work. You're never going to come home. You're never going to get a vacation. You're never going to do anything but work. And your money's going to look at you and say, thank God. I've been waiting for this day. Because it has. All right, you got $150,000 in equity. And you take out $100,000 of that equity in a loan. And that loan costs you 5%. I know that's high for today, but let's just use that number. The cost on that loan is $417. How many of you in here need $100,000 for an opportunity right now? Put your hands in the air and do not put them down. Everybody else that has their hands down, I want you to look around. All these people, all of them need $100,000. How many of you with your hands up would be willing to pay 12% for $100,000? I just showed you an opportunity for you to make your money, your lazy money, go to work for you. There's the lenders. Everybody in here that has equity in their house, you guys already said it. And there's your borrowers at 12%, which is $1,000 a month. That means you make $583 every single month for doing nothing. You didn't have to work any harder. You didn't have to work overtime. You barely had to take on any risk because it's a first secured lien. I want you to imagine you own a restaurant. Would you eat dinner and take your friends and your family to your restaurant? Yes. If you owned a salon, would you get your hair cut at your salon? Absolutely. You wouldn't go to the people down the street, would you? No, that'd be silly. If you owned a gym, would you work out at your gym? If you owned a bank, would you make deposits in your bank or Bank of America? Your bank, right? Okay. If you needed a loan for a car, a house, or something else, a rehab, would you go to your bank and borrow the money? Yeah. And if you borrowed money from your bank, would you pay your bank back with interest? Absolutely. You wouldn't steal from your bank. You wouldn't steal from your gym. You wouldn't steal from your salon. You don't steal from your business. Why don't you all have your own bank? You haven't learned how to do this yet. We're about to. I'm going to show you a 200-year-old concept that has been used by the wealthiest families in history. You know who those are? Anyone over here who know who the Rothschilds are? How about Ray Kroc? What did he own? McDonald's. Walt Disney World. You know how they started that business during the Great Depression? He was broke. I'm going to show you. Doris Christopher, pampered chef. She sold it to Warren Buffett for billions. I'm going to show you how she started her company. They were all their own bank. It involves you having three things. Number one, you need a machine. Right now, you use somebody else's machine called the bank. This machine is nothing more than a dividend-paying whole life insurance policy from a mutually owned company. I'm watching. This is the point where people want to go to the bathroom. Sit your asses down and listen. Because you think I'm talking about a regular whole life that you bought from your broke-ass brother-in-law. Or you're thinking about the life insurance store down the street and you're saying, oh man, that's the one I'm going to go to. No. This is a specially designed and engineered whole life. The specially designed whole life that we designed looks nothing like life insurance. It looks more like a supercharged bank account. Look this up and write this down. BOLI, B-O-L-I. Google it. It stands for bank-owned life insurance. What you will find is you will find that banks own more whole life insurance, not IULs, not term insurance, whole life, than they own in land and buildings combined. Not only do they own more whole life, banks continue to keep buying and buying more. So you got to say to yourself, are banks stupid? Or do banks know something I don't know? $75 billion banks put into whole life. They're not stupid, folks. So how does a bank work? What do? You make money, and what have you been lied to and told to do with your money you make? Yeah, what do? You put it in the bank. And what's the bank do? They pay you an interest rate, right? Let's just pretend it's 4%. Banks move that money. They make it go to work, and they lend it to your neighbor. Your neighbor's buying a new house. They lend it out to your neighbor at 7%. You're happy you hate your neighbor anyway. Like, dude, get the hell out of here. And then your neighbor takes the money from the mortgage, pays the seller, and the seller does what? What they've been lied to about, puts it back in somebody else's bank. Every one of these transactions, who was in control? The bank. And the bank did what with your money? Made it work for them. So the bank pays you for, lends it out, and in doing that, the spread between what they pay you and what they lend the money out is 20%. Is that what the bank made? 500%. 4 divided into 20 is what? 5. 5 times more is 500% more than you. Look it up, BauerFinancial.com. Banks make 400 to 1,300% more than you do. Look at the numbers on this screen right here. This is a real client. His name's Kevin. Not a big plan. He put 50 grand. He had 50 grand sitting in someone else's bank, and he shifted where that money stood, and he put it into his bank, which is that specially designed whole life. Then after that, he decided to put a little over about $491 a month, every single month into the plan. And in the first year, he had $51,000 available. So he put 55 in, but he's got 51. That sounds like shit, doesn't it? Wait, I put 55 in and I can only use 51? Building wealth is a marathon. It is not a sprint. It takes time. You see, he puts this money in there. And then how many of you, who in here could use $50,000 right now? Okay, so then Kevin lends it to somebody over here for 12%. When he takes $50,000 out of an account that has 55 in it, how much money's left? 5,000 is what you think, right? Wrong. The exact same amount he put in. Because in this machine, when you take money out, you take it as a loan because the insurance company has all the money. And they just say, hey, we will give you part of your death benefit while you're living as a loan. Now, most people are like, oh, I don't want to get loans bad, loans debt bad. What if the loan never needed to be paid back? Well, that's a lie because it really does need to be paid back, but it gets paid back the day you graduate and go somewhere better. That's the day it gets paid back. But we're not going to do that because you already told me you wouldn't steal from your bank. This is your bank. So if you took 50 grand out to lend it over here, what would you do when he started paying interest on that money? Whose bank would you put it back into? Your own bank. You guys are getting this, right? If I put it in and I move it like the bank and I take it out and I don't interrupt the compounding effect on my money, why would you ever leave the money in the account? You wouldn't. I started a policy. I put 30 grand in it. And I put it into my policy. I immediately, in the first 30 days, took 23,000 out. Now, when I take money out of my policy, the insurance company gives me part of my death benefit, but they charge me interest on that. Would anyone have a problem if your bank paid you 6%, and then when you took your money out of your bank, they charged you 5%? Would you have a problem making 1% on money that you have in your hand? Absolutely not. You're not even getting 1% now, and your money's sitting in the bank. You took it out, and now it's making 10, 12%. I took that 23,000 out, and what I did is I paid off KeyBank. But you see, then I was like, all right, I got to treat my money the same as I treat the bank's money. So I took the $289 that I used to give to KeyBank, and instead of giving it back to KeyBank, I put it back in my bank. It's a circle, folks. Your money starts on the left, it goes over to the right to go to work for you, and then that money comes back to your bank. Is that complicated? So now I got $289, which is the same as me making 9% because KeyBank charged me 9%. Get that? How many times did you make money in this transaction? Twice, thank you. 2 times. You made money on the spread, just like the bank does, and then you made money taking back the 9% that you were giving away to whatever bank, my bank was KeyBank. But you guys are like, I don't have any debt, this won't work. Oh, okay. You saw the hands go up for people that need money. So I take this 23 grand. And then I do a loan from my policy, and I give it to one of you, or I go to Private Money Club, and I lend it to somebody on Private Money Club that has a deal, and I charge them 12%. I take the 12%, and what do? I put it back in my bank, and I connect the dots in the bottom, on the middle, and I make a spread. But then some people are like, yeah, but 1% is not a lot. Okay, let's go back to this. Look at the screen. Year 2. Kevin's cash-on-cash return is what? 21%. If the cost of capital is 5%, and right now it's actually lower, I'm giving you the high number, is 5%, who here would have a problem paying the insurance company 5% when they are paying you 21%? Anyone have a problem with that? Because I don't. And you know the best part about uninterrupted compound interest? You want to know what the best part is? No matter what happens in your life, no matter what happens to the economy, no matter what happens in the markets, your money every single day goes where? Up. It's slow because compounding is a marathon. But every day you have more money you did the day before. And there's nothing in a specially designed whole life that can change that. These are real numbers, folks, right off of the illustration. And this is even the new plan designs with the lower guaranteed interest rates. So what I've done today is I've given you the pimple on the elephant's ass. I have literally lit a fire under you that you now have to promise me you will apply this knowledge. You will, and listen, this isn't enough for you to make a decision, but it's enough to get you to do more due diligence. Who in here researches things before they buy them? If you want more of this, go to my YouTube. It's the Chris Naugle, and subscribe. I've got hundreds of videos teaching you this. Not just videos of me talking, case studies of actual clients that are actually using this to get all the money back for all the cars they ever buy, drive, and own. You guys got to get around the campfire. You guys got to start getting around people that know how this works. Because if you don't, you're going to ride the roller coaster like I did. Because it's either going to be one of the most difficult times in your life, or it is going to be the biggest fucking opportunity of your entire life. So folks, thank you so very much. Check out Horizon Trust out here to learn how to take control of your self-directed IRA, and also check out Private Money Club. Sign up for free. Private Money Club is exactly what you did for or what I did for dating for money. There's people with money that want to make more money, and there's people that need money to make more money. You just saw that. Thank you all for your time today. I appreciate it very much. God bless. I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.